What I'm about to show you is going to sound too good to be true. When I first learned about this over 8 years ago, it sounded too good to be true to me too. I read everything I could find on it, watched all the videos, tried to argue against it, tried to poke holes in it, but here's what I couldn't deny. Wealthy families have been using this system like this for generations. And the reason you've never heard about it is because banks and Wall Street own the popular narratives. By the end of this video, you'll understand a very high level view of infinite banking, how money moves through the system, why it works, and why it's likely different from everything you've been taught. I'm Brian Moody. I flew KC 135s for the Air Force. I'm an airline pilot and a former math teacher. I walked away from teaching when I realized the conventional financial system was designed to keep families dependent, not wealthy. And now I'm an authorized infinite banking concept practitioner, showing people how to break that dependency. Before you say, this is just whole life insurance, hold that thought. There's a massive difference in policy design, and that difference is everything. So let's start with how money flows in most people's lives. So you have income. It could be W 2 income, business income, 1099 income, rents, royalties, retirement, whatever. But that income's going to come into your life. And you really have two paths that this can split on. It can either be spent or it can be saved. So, spending, to the left here, that includes bills, lifestyle, giving, it's necessary consumption. But saving should be your foundation. And here's what most people get wrong. They jump straight to investing before building proper protection and accessible savings. And here's the painful truth most people never calculate. Over your lifetime, you're probably handing to banks somewhere between $500 and $800,000. That's insane. And that's what's going to them just simply in the form of interest payments alone. You see, when you use the banks, whether that is your savings or car loans, mortgages, credit cards, student loans, that's your wealth that's building their balance sheet. And it just grows and grows and grows off of everybody else. Well, the question infinite banking answer is what if you could recapture some of that flow and maybe all of that flow? So here's the typical system and why it's rigged against you. You save money in your bank. The bank then is going to take that money and they're going to loan it to other people. They're not just going to loan a portion of what it is because of fractional reserve banking. They're going to make many loans off of that money. Well, those people are going to pay back to the bank large interest rates, maybe 8, 10, 12. If it's the form of a credit card, it could be 24%. And at that exact same time, what's the bank giving you? They're giving you maybe 0.5%, maybe 0.1%, 1%. I don't know, it changes, but it's much smaller. They're collecting the difference from all of these loans. They're profiting from that spread. They're profiting from fractional reserve banking based on your deposits. And this is your money is essentially making them wealthy. So then when you need money for a car, a roof, a business opportunity, an investment, something like that, you go back to this same bank here and you borrow at a high interest rate. So they're once again, they're going to loan you money. And what are you going to do? You're going to pay them back. You're paying them to use capital that was built on your deposits. So do you see the trap? You're building the bank's wealth on both sides of the equations as a depositor and as a borrower. You're getting minimal growth on your savings. You're paying high interest on your borrowing. The bank wins more than twice, but they win at least twice and you lose twice. And this is why you can make $150,000 a year and still feel broke. You're not bad with money. You're just stuck in a system designed to extract wealth from you. So, infinite banking flips this completely. Instead of saving in a bank, you pay premium into a specially designed whole life insurance policy. And so, what used to be savings going to the bank is now your premium. Savings is premium. That's the key mindset shift. You're not buying insurance the way most people think about it. You're building a savings vehicle that happens to have a death benefit attached. And unlike a bank account, you maintain control of that savings. You have no permission needed to access your money, no credit checks, no waiting periods. No one can freeze your account. So, in traditional banking up here, you're a customer asking permission to use money. In infinite banking, you're the owner controlling your own capital. It's your personal banking system. And it's just a new place to save in the form of premium. And you're probably wondering, but okay, why? Why whole life insurance? What makes this vehicle so special? And this is where it starts to get interesting. So think of your whole life insurance policy as like a fortress of benefits. And I'll break down just five of the major categories here. Guarantees. So, number one, your policy is going to come with guarantees. It's going to come with a death benefit. From day one, it's an income tax free wealth transfer to your family. You're also going to have guaranteed cash value, not dependent on market performance, and you're going to have guaranteed level premiums. Those are locked in, they'll never increase. You're also, inside of these policies, going to get a competitive yield. These policies historically grow at 4 to 6% annualized long term. So that's uninterrupted compounding of your money. It's going to compound every single day without interruption. There's no market volatility because whole life insurance is what we call an uncorrelated asset. It's not tied to Wall Street. It's not tied to the market performance. So in 2008, when 401ks dropped 40%, whole life policies kept growing. In 2020, same thing. In 2022, same thing again. Another awesome benefit is flexibility. Your cash value acts as a guaranteed line of credit, always available, unstructured loans. You set the repayment terms, not a bank. It's liquid. You can access your capital in days, not months, and you have full control. You're both the borrower and the lender. And on top of that, on the flexibility, the way we design these policies to use for the infinite banking concept, you have flexibility in premium. You're going to have some level of a minimum and a maximum that you can put into these policies, which gives you a lot of opportunity to save more or in hard times, save a little less. Another thing we got here is tax advantages. These policies are going to come with an income tax-free death benefit, tax-free loan access. You can access at some point hundreds of thousands of dollars without triggering a tax event. There's no IRS reporting requirements. You get tax-free growth inside the policy. And if it's used and structured properly, that'll likely be tax-free growth for your entire life. Another great benefit is these are private. It's not subject to government rule changes like many financial products that happen to be creatures of the tax code. They're going to provide creditor protection in most states, so lawsuits can't touch it. And finally, the secret sauce of these is the ability to leverage. And that I'll display over here. So the way that works, and here's the part that breaks most people's brains whenever it's coming to infinite banking. Now, the insurance company, you're going to take a policy loan, and everything from that loan up, they're going to put a little lien against it. And let's say it's a $100,000 loan. Well, if this represents the $100,000, all they're going to do is just kind of lock that up so that you can't access it twice. Now, you take that money and do whatever you want with it. Maybe you put it down on a home. Maybe you had a business opportunity. Maybe you had an investment opportunity. It doesn't matter. But the key is your cash value over here, whatever the cash value in that policy continues to grow uninterrupted, even while that money's being used elsewhere. That's your money working in two places. So it's growing inside the policy at a guaranteed interest rate plus dividends. And then whatever you're doing with that loan on the right side of the screen, it's also potentially growing there or being used in a way that you needed to use it. So your dollars are doing two jobs at the exact same time. So this isn't just insurance. It's a savings account, emergency fund, financing vehicle, tax shelter, and legacy biller all in one policy. So let me give you a little analogy to see if we can make this click. Think about a mortgage. Most people understand that a mortgage over time gains equity. Every payment you make is in the beginning just going to give you a little bit of equity in that house, and that's your ownership stake. Every time you make another payment, you're going to get a little bit more. And this happens slowly over time. And I'm on a 30-year mortgage. In 15 years, you probably don't even have 50% equity. But when you have built some equity up, the bank will let you access some of that equity in the form of typically a HELOC. So, with that HELOC, the home equity line of credit, you can borrow against the equity and use that money however you want. But here's the problem: the bank controls everything. They set the terms, they set the interest rate, they can freeze your line of credit. They have a lien against your house, and you're asking permission to use your own equity from an outside entity. And there's a better way. The other way is the whole life policy. And it works very similarly, better. Because just like the mortgage, your policy is going to build equity with each premium payment. But because these are specially designed, it's going to build cash value, which is like the equity, much, 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 much faster, to the point where within just a couple years, or every dollar you pay into it that year is available. So in just a few years, you can have very, very, very high equity. Sometimes in the very first year, you can have high equity. And we have access to this cash value or this equity in the form of a policy loan. So the policy loan provision also lets you access your money to do anything you need to do. And when you take that policy loan, the difference is you control the whole process. You set the repayment terms, not the insurance company. So, unlike the bank who's going to tell you how much and when and at what rate that you have to pay that money back or you lose your home, you're going to set that completely. And also, the company in this case, they can't freeze your access. There's no credit check, there's no applications. It is literally the absolute best loan I've ever taken or ever used. It's phenomenal. So it's like a HELOC, except you're in complete control, and that asset keeps growing even while you're borrowing against it. If this is making any sense to you and you want to see how this actually works in practice, subscribe to this channel. In my next video, I'm going to sketch out the process of using a policy loan from a 30,000-foot view. You'll see exactly how the money flows when you finance a purchase through your policy instead of through a bank. So let me tie this all together so you can kind of see the complete picture. Income's going to come into your life. And instead of saving it elsewhere, the first thing that you do is you save money in the form of premium. Now, that premium is going to very quickly build cash value in these specially designed policies. You can then take a policy loan against that cash value. Very important language, because while you're taking that loan, remember that cash value continues to grow at interest and dividends. You're going to use that policy loan for whatever purpose it is, the spending or investing you need to do. The key is you're going to be a good banker and you're going to repay that loan. Except when you repay it, it rebuilds or knocks down the lien against your cash value on that policy loan, and that money is accessible once again. So the cool thing is, as the income flows into your life, you save it in the form of premium. Premium builds cash value, and this circle just keeps getting bigger and bigger and bigger while all of that money stays inside of your ecosystem. The repayment part is important. Instead of sending loan payments to like Chase, Ford Credit, or wherever else, you're sending that back to your policy, back into your system. That goes back into your cash value where it continues to grow for the rest of your life. So you're recapturing a lot of the interest that used to enrich a bank. And over decades, this compounds into hundreds of thousands of dollars that stay in your family ecosystem instead of being transferred to outside institutions. That's basic infinite banking. It doesn't eliminate the banking function. Banking is always happening. You're just changing who profits from it and who controls it. So now that you understand the high level system, income to premium, premium to cash value that can be used as a policy loan, repayments back to the policy, the next question is, how do you actually use a policy loan in practice? In the next video, I'm going to walk you through a very high level, 30,000-foot overview of how the policy loan provision could benefit you. And that's where this concept becomes practical, and where you'll start being able to see how you can apply this in your own life. So watch that next. The link's right here.